Mitch, what is going on with the Charlotte real estate market? This is a common question that I often get. And today, guys, we're going right into July's year-to-date numbers. We're going to break down everything that's happening and the stuff you need to know. So stick around to the end because there's some great information I'm about to share with you directly from our MLS. Welcome to the channel. And if it's your first time, thank you. My name is Mitch. I'm a luxury real estate advisor located right here in Charlotte, North Carolina. And my team and I specialize in selling luxury homes all over the state of North Carolina. Now, if you're considering moving to the area, maybe relocating, all my information is on the screen and below this video. My team and I would love to be a resource for you. Also, we do come out with these videos every week. We'd love to educate you and keep you up to date on what's happening. We appreciate the like and follow. But without further ado, let's jump right into this update. Now, as we move through this analysis, there's three key themes I want to point out, and I'm going to walk you through that are so important to this market. Inventory, home equity, and affordability. So as we walk through this analysis, those three things are what we're going to zero in on, because by the time we're done, you're going to understand exactly what's happening. Now, as you can see on the screen for the Charlotte region, which let me remind you is a very large area and includes areas like Anson, Gaston, Iredell, Lincoln County, Mecklenburg, all the way down to Lancaster and York. So it's a very large area. You can see that for new listings, we're down 25% year to date, okay, versus last year. We're also down 15% on pending sales. This is the amount of homes going under contract. And of course, on the closed sales, we're down 23% from last year. Now, from a sales price perspective, the prices, however, are not coming down in the Charlotte region. The median price rose year to date by 3%, and the average sale price has gone up 7.2% in the Charlotte region. Now, this includes everything for single family, multifamily, townhome, and condo. However, I will tell you, even in this interest rate environment, these prices are continuing to rise, and we're going to dig deep into this later on. Now, the home prices continue to rise in our area, and to really understand exactly what's happening, I pulled three charts for the city of Charlotte, single family only, that's going to lay the groundwork to our discussion on home equity, inventory, and affordability. So setting the stage on the home equity, household affordability, and inventory situation that we're facing right now, I wanted to draw your attention to this historical chart that shows you the average sale price in Charlotte for single family homes. Now, I said this before, real estate is micro within the micro. Because this is a Charlotte market update, I think it's important that we focus on Charlotte to really give you an idea what's going on. Also, the data you see here on the screen is directly coming out of Canopy MLS SAM module, which is not manipulated. This is live as we look at it. So I wanted to give you some context around what happened historically so we can have a better discussion on the household equity situation. From 2004, the average sale price in this city for a single-family home was $214,000. If we move forward all the way up until February of 2020, which the pandemic really hit at the end of February, late February, the average sale price rose to $362,000. Over that 16-year period, that gain was $148,000 in the average sale price move in the city of Charlotte for single-family homes. From February 2020 to July of 2023, which is the most recent data we have, this data is always in arrears. We don't have August yet. The average sale price rose all the way up to $561,000. In that 3-year period, the average sale price moved $200,000, or $66,000 roughly a year, which was astronomical. That was 7 times faster in sale price movement than the previous 16 years from 2004 to February 2020. Now, if we look at the same data regarding inventory and where we are in Charlotte for months supply currently and where we've been, I wanted to bring your attention to this chart As you can see here, we had that big swell of inventory, of course, during the great financial crisis back in 2008. And that kind of stuck around the city here for quite some time. I know Charlotte had a lot of homes for sale in that 2009 to 2012, 13 range, almost, 10 or 11 months supply. Then, of course, we dwindled down that supply going into 2013, 2014, and we kind of stuck around that 2 month supply there from 2016 all the way through going into the end of 2019. And then, of course, when the pandemic hit, that's when we saw the huge drop in supply of single family homes in the area, and got down all the way below, or about 0.6 months in April of 2022. And then, of course, now it's starting to catch back up to 1.4 as of July. However, I will tell you, we are still at historic levels of inventory shortages here in the city. We do not have enough homes, and this actually leads me to my next point, which is new listings. Now, in regards to new listings and, of course, that impact on inventory, as you can see from this chart, we've had new listings coming on the market right around that 13 to 14,000 unit mark since 2013, roughly. As you can see here, we've kind of hummed along right along that line. And then, of course, what happened in 2022 is when the rates started to hike. And this is what I wanted to go a little bit deeper on with you right now so you understand this. If we look at the 5-year segment, you can see right from, we're right around that 14,000, a little over range, as I showed you before. But then, of course, when the interest rates started going up, we saw less and less and less new listings hit the market. This is a pattern that we've seen in the city for single-family homes, and of course will continue with rates being high. And this is important to understand because there is a reason why we're seeing less new listings. And I'm going to get into this in a minute, but I wanted to set the stage on exactly what's happening with new listings. And of course, in terms of closed sales, you can see we got a similar pattern, right? There's less closed that are occurring, and then obviously there's less as well that are going under contract. So everything is kind of going in the same direction. We have less, and that's because of the market conditions with the interest rate environment that we're in, and of course some other factors that I'm going to go deep on next. I first want to talk about home equity. Now, as you saw in those last 3 charts, specifically the average sale price, without a question, right now homeowners are sitting on the highest equity positions they may have ever seen in their lifetime. On top of that, people that bought homes prior to 2022 are sitting on very low interest rates versus the historical averages and, of course, what's happening right now. What this is creating is people to not want to be incentivized to move. And here's why. As you can see on the screen, almost 90% of homeowners have an interest rate below 6%. That is a big, big number. And Redfin actually produced a report, and it said that in the United States, nearly 1/4 of all these mortgages right now have an interest rates that are about 3%. Now, I don't know about you, but if I had an interest rate of 3%, unless I had a deep incentive to move, it really doesn't make much sense to sell and go into a 7% interest rate environment. That's the first major issue we're seeing in Charlotte right now. Now, the second point I want to make is the inventory situation. After the 2008 crisis, no question about it, the inventory in this country was at an all-time high. Many builders got wiped out, and areas such as Charlotte, that was a boom town during 2006 and 7, really got impacted. All that inventory that built up took many, many years, you could see from the chart, to sell off. Also, a lot of home builders stopped building. Now, why was this a problem? Well, no, the inventory that was supposed to be continue to be built, like it usually is, had significantly slowed down in this country and, of course, the Charlotte region. And then once the pandemic hit, we had another major, major shift in this country, and that was the work from home environment. You had many people that no longer needed to live in a major city, no longer needed to live in Manhattan, Chicago, LA, Miami. They could come to an area like Charlotte, and in my opinion was undervalued before the pandemic, and they could come here, live here, work here, and have a significantly better lifestyle than they had in some of these other areas of the country. Not to mention the tax structures, etc. It was a very good move. But the third thing that really happened that no one's really talking about are the birth rates. As you can see on the screen, there was a certain bump up in birth rates between 1990 and 2005. Now, this spike in birth rates essentially has now produced many 33 to say 35, 36-year-olds that are now ready to buy a house, one of the largest generations in spikes. And guess what? There are no homes for these people. So not only did the construction slow down from the 2008 crash, but now you also have the highest amount of 33 to 35-year-olds we've ever seen who want to buy a home. They're new to the market, but there's no supply to keep these people in new homes. So what is happening? Well, if you look in Charlotte, they're building apartments on every freaking corner to help with the demand that's moving to this city and, of course, this demographic. This is kind of unspoken. It's happening across the country, but that demographic is huge. So the second major issue is inventory. Now, the last piece is, of course, affordability. And the question is, can we get a big enough release in affordability to cause more movement in the market to, again, get some inventory going, get some supply back, demand, and kind of rebalance ourselves to get things moving? Now, no question about it, affordability is at an all-time low. And in my opinion, there's only really three things that are going to cause a release for affordability. Number one, rising wages. It's without a question, the Fed is targeting and has been keeping an eye on the rising wage inflation in this country. Now, if all of a sudden we've got a significant wage increase for everybody, it would certainly help affordability, but let's be honest, that's not going to happen anytime soon. It's no secret. Wages have not kept up with the prices of homes, which is really continuing to widen the gap of affordability. So really, that's the first thing that would really need to happen to create, which is probably a long shot. The second thing would have to be a major drop in home prices. Now, I don't have a crystal ball, but there would have to be some major shock in the market to cause this, because as of right now, with the economy still being as strong as it is, and again, interest rates as high as they are, things are still moving. But again, these home prices are not coming down. They're actually, in our area, in the Charlotte region, they are going up. So I don't see a home price decline anytime soon to increase or help on the affordability. Now, the third piece of this, of course, are the interest rates, which in the short term could probably be the solution. But again, the Fed is fighting a much larger fight than housing right now. We're actually a byproduct of what's happening when they raise these rates. They're looking at the whole picture of inflation across the country. So not only with goods and services, but even, for example, if you go to the grocery store, I'm sure you're noticing, like I am, everything's more expensive. So they keep telling us there's a ways to go here and there's more to go. We don't know. But that is the one area, in my opinion, that would cause a release. So what's really the issue? Well, you have a big cohort of what I call move-up sellers, meaning they want to sell a house and get a bigger one. You've also have buyers that want to come into the market with no supply, meaning they don't have a house to sell, but they want to buy. And you also have first-time home buyers. So you may have somebody who's never owned a home that needs to come into the market. Eventually, what's going to happen when we stay higher for longer, which I believe is going to be the case, you're going to have what we call acceptance. At some point, the market's going to say, you know what, this is what it is. I got to go on with my life, and I got to make these financial decisions to either buy a house, upgrade, etc. Now, the first cohort, in my opinion, of who's going to be the most vulnerable to accept this the fastest is really the first-time buyer. They're getting squeezed very, very hard right now. Rents are rising, and also they know that, look, if the rates don't come down quickly enough and the prices keep going up, they better buy now. Now, the cohort that is not as incentivized and has a slower acceptance rate is really the move-up seller or maybe the move-up buyer. They've already owned a house. They currently own a home. Maybe they sold one in the past. They don't have much incentive because a lot of them are sitting on low interest rates. A lot of them are sitting on a ton of equity, whether it's in their current house that they own, or maybe they sold one and they're just sitting on the sidelines with cash. Their acceptance rate is going to be much, much slower. The reason why I point this out is because people like myself that are in the game every single day, we can kind of see these pockets of people, right? And I can tell you the biggest piece that is kind of in this area of being really kind of stuck, if you will, are the move up buyer, the move up seller, where again, you've got movement in the market, but with the way these rates are, it's been difficult. So I hope that laid some groundwork for you of exactly what's happening in Charlotte. Make no mistake, the area of Charlotte is still seeing strong price appreciation, but we do have some issues in terms of inventory simply because people have so much equity in such low rates. They're just not incentivized enough to move and go into a 7.5 interest rate environment. So again, I really appreciate you tuning in for this July market update. I hope you got a lot of value from this. If you did, all my information is on the screen and below this video. I would love to be a resource for you or your family to buy a home here in the Carolinas. But guys, I appreciate your time and I will see you next week.